welcome to Sectors Up Close. I'm Elena Casas. Today we're focusing on energy and my guest is Aoifinn Devitt, CIO of Moneta. Spiralling global energy prices hit headlines again this week as OPEC Plus cut oil output on Monday and Russia stopped pumping gas through its biggest pipeline to Europe indefinitely. All of this adds to the financial incentive to move away from fossil fuels, coming just as the Biden administration's so-called Inflation Reduction Act earmarked $260 billion of public spending by 2050 for the energy transition. New figures from McKinsey suggest 84% of total global energy demand by that date will be renewables. It predicts 60% will be solar and 24% wind. Of course, companies from chemicals to the miners of rare earth metals stand to benefit here. But this chart shows some of the more obvious winners, the solar energy companies. The Invesco Solar ETF is up 5% this year and 13% on the quarter. But will the sun continue to shine on renewable energy? Let's ask Aoifinn Devitt, CIO of Moneta. Aoifinn, hi, thanks for joining us. So, for renewable energy companies, how essential is this new public investment that they're getting in the US? How much private investment will this encourage?
I think it's going to be great from both a public and a private standpoint, finally getting this act passed after many iterations, many failed attempts, even though it wasn't perhaps the bumper number that was looked for. The fact that there is so much now allocated to this energy transition, it is good for the consumer and it's good for the companies, and it's also good for the private investor that will now have the incentive to invest alongside some of these public funds. We've seen the interest from the private sector in the renewable sector just surge recently. It's been all part and parcel of the interest that institutions have in investing in infrastructure. Infrastructure is a key inflation hedge in a portfolio. It's seen as giving a portfolio essential resilience. It tends to have a yield that keeps pace with inflation. So infrastructure has been very much in the sights of institutions for some time. Renewable energy is a part of that infrastructure, whether it be wind farms or other plants, hydro plants, solar, investing in solar energy infrastructure. That's all been a key part of having this investment in infrastructure be sustainable. For US and Australian institutions in particular, that's been key. So the private sector has been talking about this for some time. I think the delay on the public investment side has caused things to be sluggish there. But we are seeing now a real pickup in excitement and also just the evidence that legislative change is possible and that something is getting done that has really provided a boost and momentum to that sector.
But are these renewable energy companies still dependent on government subsidies and therefore vulnerable to changes in policy, or are they profitable in their own right?
They will be moving towards a path to profitability in their own right. We can see that the long-term trajectory of renewable energy is that it will be cheaper. That's why, despite the fact that we're now opening up other channels of even fossil fuel production because we are concerned about energy security, because that is a short-term concern, I'm not concerned that that will detract from the trajectory of renewables in the medium and long term, because they make sense, because we will have a growing demand for energy all around the world. We can see that in terms of the demand for electricity now and how that's growing. We're going to have to find many different sources to address that. Nuclear is another area where we're seeing more incentives and perhaps more interest in that area after some time of it not being as attractive. So I see that the renewables will be cheaper, and in the long term that's going to make those companies very profitable.
There is funding in the Inflation Reduction Act, isn't there, that's aimed at decarbonising the fossil fuel supply chain. Are these incentives going to be the final tipping point that lead energy giants to start producing energy differently, or have the soaring prices that we've seen in recent months disincentivised the big firms from investing in renewables?
I see the path to the energy transition as being very much a one-way direction. I don't see us going into reverse. The big companies know now that they have to address this. They're seeing stakeholder activism, shareholder activism. They're demanding that. We're seeing board seats now being taken by activist groups. I think this is not reversing. Of course, there has been a windfall recently, and that will probably enable them to execute parts of that energy transition more convincingly and perhaps even more quickly. So I see that it is actually a win-win. I understand that parts of the Act were not as popular with certain counterparties because they saw that that was providing an incentive to stay in fossil fuel production, essentially by offering incentives there for that transition, that they would have wished instead that it all goes to renewable energy. But essentially we need to address this from all angles. We need to be inside the tent, not outside the tent. What that means is we need to also have the fossil fuel companies on board with this And I see these incentives as being a key part of encouraging that.
We've talked about public policy in the US. Here in Europe, of course, the overriding priority for governments is to try and cut soaring energy prices for consumers, regardless of where that energy is produced. So we're seeing things like coal plants being reopened. What does this mean for renewables? Are soaring prices detracting from that switch?
I actually see, again, it all being quite positive. The rising energy prices have lifted all ships, essentially, when it comes to any source of energy production. We've seen renewables, wind farms, etc., have a bit of a windfall, to use the pun, because they've, again, been benefiting from these higher prices. Many of them are using that now to make reinvestments in perhaps newer technology, faster expansion, and that's all a very positive thing. If there are caps and the consumer needs that, clearly some of the staggering rise is not going to be sustainable for the consumer. This coming winter is going to be a tough winter. Clearly they need some subsidies in that way. I don't see that that's going to take from the renewable picture. If we look at the energy trilemma that all governments around the world are facing, they're trying to balance the need for energy security, to keep pricing affordable, and of course to keep that sustainable, because that's the long game. In Europe, they're probably more focused than anywhere on that. There's a lot of political demand, political capital tied up with that. They can't really sacrifice any of those, say, three legs of that trilemma, of that stool. So therefore, they will be focusing on all three parts. And I see that that's going to actually be quite positive for the renewables. I don't have any doubt that that's somewhere investors will want to be invested going forward.
From an investor perspective, the renewable space is vast, and of course some technologies are more tried and tested than others. Where is most interesting to put your money in your view?
I see that anything that is already in action with a yield is interesting from an investor standpoint. Remember, we can't simply be trying to achieve impact or trying to achieve a long-term goal of sustainability in a portfolio. We also have to focus on return. We've spoken before about how some of the other pressures on returns today. We've seen equity markets having a tumultuous start to the year. We've seen fixed income markets really struggle with interest rates where they are and the rising rate environment. Inflation is the one constant today. We need to have elements of the portfolio that are going to be resilient around inflation, which means having a yield that keeps pace. So within that, in that renewable energy complex, I see that things that are already up and running, that are producing a yield, are the most interesting parts of that.
Thanks so much for that, Aoifinn Devitt, CIO of Moneta. Well, that's your roundup of the energy sector. I'm Elena Casas, and this is Reuters.